Hi everybody, we're back. Check this out. Canadian Japanese yen. It's time for an important update on this one. You know, we had quite a move, right? Which was counterproductive for us because we're still here holding a bullish position, right? Nothing have changed. We've set our stop loss level at 81.50 and it wasn't taken, right? So we're still here. We're still alive. In fact, we actually just pulled the trigger and increase the position again after we've been decreasing it all across that downside move we had last week. Now, you probably remember we got in conveniently around the 200 daily moving average, right? And began to climb. The climb was a little bit hectic. I mean, it was steadily, in some sense, but from a different sense, it was up and down every single day, right? We call this the staircase move. And you know, at some point we felt that price was gonna look for a downside correction because it was just taking the previous high, right? As it was doing so, we basically began to pull out. And then of course came the first day, which was quite significant on the downside. We pretty much pulled out all the way, right? We actually just left one portion in because we wanted to keep this position alive. But basically we took most of the profit here. And then, of course, started to accumulate a loss on that last trade we kept in because we felt that we can, we will be able to come back up and, and save that trade. At the end of the day. Now, basically, we were looking at the 200 daily moving average to be, kind of the last line of support. We thought this could be, an element that we can trust, we can rely on, which is pretty much why we've set the stop loss level at 81.50 to begin with. So when price was heading towards the 200 daily moving average, that was an intense moment. Because at first it looked like it was basically breaking through, right? We've had that kind of a daily breakthrough, but that wasn't consistent, right? It wasn't consistent with the weekly price action because the following day, which was just last Friday, price managed to cross back up, which means that the weekly close ended up right here and above the 200-day moving average, meaning the 200-day moving average is doing its job and pushing back. All right. Now we feel that this is a big sign. This is a big sign that the downside correction might be over, and we're back on the upside because the trend is up ever since pretty much August. Right. We've had that tipping point, and ever since then, price was on the upside. Aside from a technical correction, which was pretty significant in terms of time, lasted for a couple of weeks. But we're back on the upside now. I think we're back on the upside. Anyway, we're reviving this bullish position again. That's the game plan. All right. So as long as price remains right now, beginning, to move away from that 200-day moving average, that's going to be a good sign to keep, increasing the position again. All right. Now, don't forget where we're aiming at. We're aiming at where we have a bit of an ambitious target here. We're talking about 86.47. So that's pretty much about 400 pip that we expect to collect. All right, I'm going to show you the big picture, which is actually a monthly chart formation that you can go back with all the way to the beginning of 2016. That's how, profound this formation is. And we feel that price just coming off, the lower section, and it could basically land back at the higher section, which is why we're using 86.47 as our target, right? Interesting stuff. All right, guys, we'll have to come back later on and follow up on what happened here with the 200-day moving average and whether this downside correction was over or not. We'll have to come back and see. Yeah, for now, we're going to leave the stop loss level in place until we get some traction here, and then we'll begin to adjust that level accordingly. That's about that for today, guys. Have a nice trading day. Forex Market Analytics. We'll be back tomorrow. Take care.